morning, traders from each and every part of the world that you're joining this series of the daily morning market call from. And if you can hear me, comment on the chat box good morning so that we proceed. Now, we have been experiencing a shed off in the Wall Street. And when I speak about the Wall Street in New York, I'm simply meaning stocks and baskets of stocks. And our concentration today is going to be on Nasdaq. We experience a meltdown of up to $1.1 trillion in a single occasion. We're going to be looking at the implication of that and why this is happening. We have also been experiencing tensions not only in trade wars but also in the war front in Eastern Europe that has its implication in the financial markets. And we are also getting to see concerns in major banks in the United States. I'm speaking about Goldman Sachs. I'm speaking about BlackRock. Financial institutions are alluding that a recession, which is extremely high cost of living, which is about to happen in the United States. And in retaliation to that, we see the President of the United States, Donald Trump, as not responding to that question directly if the United States is to experience recession. Now, this economic crisis, and to define a recession, is a significant, widespread, and prolonged downturn in economic activity. The economy was doing good, and it suddenly starts being bad, not suddenly, and most of the time occasionally start being bad. And the best indicator to locate this, of course, is the Wall Street. In the Wall Street in New York, we have companies and baskets of companies which we call indices. Now, if they are doing bad, if Nasdaq 100 companies with 40 to 50 being technology companies extremely doing bad or giving bad projections, diminishing or decreasing in their value, depreciating in their value, that would be a concern that the economy is not doing good. When you look at the labor market, we see numbers coming in relatively high at 151k. I'm speaking about the non-farm payroll, but not as expected. So we see economic data giving us below expectations. This brings about concerns which would be seen as inflation, and if continued would reoccur to recessions. Now, before we proceed, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video to mean that you could access this YouTube video at your own free time on our YouTube channel at HFM Kenya. Kindly like, subscribe, click on the notification button so that you are not left out in future content that we produce from time to time. With that said, on our side, we will ensure that we keep on putting out content that is not only educative but also encouraging for us to proceed with our journeys in the financial markets by simplifying content that we could use as our leverage to proceed with our financial journeys. Having spoken the first part of geopolitical forces, let's now look at economic forces so that we combine geopolitical forces and economic forces to find drivers in the economic sphere, or what we call fundamental analysis. Then we head over to the charts to see how the Wall Street is reacting from the trade wars brought about by the tariffs and the negative economic data being printed from the United States. And before I proceed to economic forces, it's important to know the United States controls up to 22 and above % of the global GDP. So we see quite a significant control by the United States in the global economic sphere. So when they have a crisis, the entire world will feel the shocks, And when there is cool down of the crisis, the entire world will also feel the easing. Having said that, we go to the two economic forces on the economic calendar. You could find this calendar at hfm.com by going and clicking to tools, and then you look at economic calendar for you to see this data being printed out. Now, today being the 11th of March 2025, still going into the end weeks of the first quarter, we see that we had the gross domestic product for Q4 in Japan coming out lower than expected. So the consensus was at 0.7% and the previous was 0.7%. The consensus is what economists, let me circle it, this is not what I'm talking about. This is what economists and analysts presume that the data will come out, and the actual one is what actually comes out when the data is printed. So we see 0.7% consensus is 0.6% actual, so we see a negative 0.1% data print. So what will this tell us in concern to the economic health of the Japanese state? This will be clear that the Japanese state has concerns over its growth because it fell below expectations, and of course this is going to have a somewhat weakening effect not only on the Japanese currency but also on Asian stocks and group of stocks. Now, having that in mind, let's go to the charts and see the repercussions of the same. Shooting straight up to Nasdaq. Nasdaq index. Now, to understand the background of Nasdaq, Nasdaq is an index that includes almost all stocks listed in the Nasdaq Stock Exchange and majorly composed of tech companies ranging from 40 to 50. So mostly tech companies are in this basket or index called Nasdaq. And yesterday we experienced up to 1.1 trillion meltdown, which broke below the low that we spoke about yesterday on this series of the daily morning market call. We said that as long as the trade wars continue, as long as tension continue, we expect stocks to behave negatively, to have negative data printout, and on the charts we could see that is actually what happened. So price broke below the 19,966.04 area of interest, and price is keeping on printing sharply in a bearish trajectory. This is caused by the tensions which we see not only in trade but also in military war fronts. Beginning with the first one, trade wars which have been instigated by the United States new administration of Donald J. Trump are meant to resuscitate the economy. They are meant to renegotiate deals with other countries importing their goods to the United States, but we see them having a somewhat negative connotation to United States dollar and related stocks, and by extension index like the Nasdaq or the US 100. Now, as the analogy here to understand simply is when there are tension in the world, assuming we are investors with big money, which we are investors, we wouldn't want our money to remain in stocks. We would want our money to remain in basket of stocks. We would want these monies to be in a somewhat safer spot in the investment context. So we see investors removing their money from Nasdaq, removing their money from Nasdaq related stocks, reinvesting it in something else, and most probably that becomes gold, because gold is seen as a perfect hedge amidst geopolitical tension and crisis. Now, as long as this continues, like we said yesterday, we would be short on stocks and group and baskets of stocks, and continue this narrative, monitoring new data being printed out from time to time. This is a scenario also we are going to see US 100 or S&P 500, which is giving us a much broader aspect of the US economy for both established companies and penny stocks. So we see a broader aspect that also with S&P 500, we are having price printing to the downside. When we go to European stocks, and with context to the DAX 40 or the German 40, we see also yesterday, as much as we are in a bullish trend, we printed a bearish Marabuzu, seeing the shockwaves of happening in the United States affecting different parts of the world. Remember, I've stated on this series of the Daily Morning Market Call, and the students that I've interacted with, both in person and online, that when understanding fundamental analysis, it's good to always begin by understanding the economic health of the United States, because we have stated that it controls more than 20% of the global wealth. And so when they are not doing good, we feel it. When they are doing good, we also feel it. And that's the unfortunate fact in geopolitical economics. Now, as a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes. It's important to do your due diligence and observe critical risk management. And if this is your first time to interact with financial market, kindly consider proceeding to hfm.com, attempt to register for an account, fill in your details, and our experts will get in touch with you and help you establish an account completely for free until you get to the investment stage, when you start practicing growth in your financial journey. Until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. God bless and take care.